Good morning, traders, and welcome to BCI's morning market outlook. Let's run through today's top market developments across currencies, commodities, and metals. First up, let's have a look at the US dollar index, which climbed above 97 on Monday, reaching a near 1 week high of 97.67 after President Trump confirmed that tariffs will officially take effect on the 1st of August. So far, only China, the UK, and Vietnam have reached some sort of agreement with Washington. Last week, the dollar fell to its lowest point in over 3 years, which was weighed down by rising tariff risks, fiscal concerns, and expectations of a further Fed rate cut. Stronger than expected jobs data with 147,000 new jobs added in June, which beat the forecast of 110,000 jobs, helped ease some of these worries and reduced immediate pressure on the Fed to cut. Technically, the dollar index is struggling to hold above 97. It failed to break above the 14-day moving average at 97.62, and price action remains weak. Without a sustained move above 97.20, the broader bearish trend could resume. Momentum indicators remain cautious with RSI around 40, hinting at a possible stabilization but not a reversal. If the index drops below 97, key support comes in at 96.38, which is last week's low. Next up, let's have a look at WTI crude oil, which opened weak on Monday, falling to about 64.7 before recovering to around 66.9 a barrel. The market remains under pressure after OPEC announced a larger than expected production hike of 548,000 barrels per day starting in August, up from previous monthly increases of 411,000 barrels per day. The decision is based on stable global demand and low inventories, but it has also reignited supply concerns. Technically, crude is hovering just above 66.75. Key support lies around $64, former resistance zone. If this level breaks, the downside could extend towards 63.72, the 50-day simple moving average. On the upside, the $67 round level remains immediate resistance, followed by 20-day moving average at 67.77. Market sentiment is being driven by geopolitical noise and macro headlines, so expect continued volatility in the short term. Next up, we've got gold. Gold is trading around 33.37 per ounce this morning after dipping to a low of 33.05. Rising uncertainty around US fiscal policy continues to support the yellow metal. President Trump's tax bill cleared Congress last week, but with no progress made on addressing the growing deficit, gold is benefiting from long-term inflation and debt concerns. The CBO estimates that the new legislation could add $3.4 trillion to debt over the next decade. Technically, gold remains in a bullish posture, consolidating above the 65-day moving average at 33.03 and the 3300 psychological level. The RSI is holding above 50, signaling room for further upside. Near-term support is between $3,300 and $33.03, while resistance is seen at the 20-day moving average of $33.50 and last week's high of $33.60. A break above that zone could open a path to challenge the $3,400 level. Lastly, let's have a look at the Australian dollar, which slipped below 65 cents on Monday, trading near 64.80, marking its third straight session of losses. Markets are now fully pricing in a 25 basis point rate cut from the RBA during today's meeting, which could be the third cut this year, as the central bank reacts to slowing inflation and weakening domestic growth. On top of that, weak risk sentiment, renewed tariff headlines, and disappointing trade data have weighed on the Australian dollar. Still, support from a slowly recovering Chinese economy could limit further downside. Technically, the Australian dollar remains within a bullish bullish channel, but has dipped below the 9-day simple moving average at 65.53. If price recovers above this level, momentum may improve, potentially lifting the pair towards the July 1st high of 65.90 and then the round number of 66 cents. On the downside, the initial support lies at 64.66, which is the 55-day SMA, followed by stronger support around the 64-cent mark and the 89-day simple moving average near 69.38. Well, that's all for today's morning market update. As always, keep a close eye on macro headlines and central bank commentary. Both will be the key drivers of price action today. Wishing you a great trading session ahead. And as always, manage your risk and happy trading.